Hello and welcome to this video today. Today I'd like to share with you a currency pair that I'm really interested in this week, which is NZD CAD. So NZD CAD short, really like this pair, good risk to reward ratio, and we can see on this chart, so weekly chart, you can see that the pair has actually opened up a little bit below where it closed on the Friday. So this red bar here is last week, closed just here. Friday, it's just opened up a touch below on Sunday. That to me is also a good sign that that pair will continue moving in a downward trend. No guarantees, of course, nothing's guaranteed, but it just increases the likelihood from my experience. So why else do we like the pair? Well, New Zealand Bank last month announced that the cash rate would fall, or would more likely than fall this month, April. Again, they may not, but it's a sign that they would like the currency to become weaker. And the NZD is quite strong on most other currencies, so they want to talk it down. That's a good way to talk it down. Canada, their wage growth is ticking up slightly, which gives a bit more weight to sentiment that the Canadian interest rates could potentially rise in the future, possibly. Obviously, if the consumer has more wages coming in each month, then that gives them more spending power again, which fuels inflation. So they would want to potentially curb that in the future if that were to become an issue, or at least hint at that issue, that could become an issue. So that would strengthen the Canadian dollar. So that's why this pair is definitely of interest this week. You can see on the technical side on the chart here. Again, it's a weekly chart. You can see the risk rewards are just under 5 to 1 on this pair. If you were to open the trade at the current position, 0.9, and if you were to put a stop loss up to just above last week's high, take profit at the bottom of these bars here, then that's what the risk reward would be. And also you can hold this pair over a long period because the swap on the pair is hardly worth anything, so therefore you won't pay if you hold in either direction. Other news is that the oil price it's hit a highest since 2018 amid OPEC cuts and US sanctions. Again, that may continue, again strengthening the Canadian dollar because the Canadian dollar is a petro currency. But if you were to take this trade, make sure you know how much you're risking. That's a really important thing, to know how much you're risking. So many traders blow up their accounts because they don't know how much they're risking on each trade. And if you don't know how much you're risking on each trade, then you get a surprise shock when the market will move against you. If it moves against you, and that triggers other emotions and feelings that makes you want to go back in on a trade, revenge trading. And again, you'll just blow up your account by doing that. So if you manage your risk, you know how much you're risking. It's no surprise if it does go against you. You knew exactly how much you were going to risk, and that will control your emotions when you trade. We have an app that can do that for you. So an app that can help you, or will calculate your currency risk for any pair, or any broker-based pair that you want to trade. You can do that by clicking on the link beneath this video, and that will take you to a Facebook app where you can just type in a few commands that will help you calculate your risk. There's also a video on this YouTube channel that describes how to use that tool. Any comments, questions regarding this pair or this video, please comment beneath the video. And again, make sure you know exactly how much risk you're taking on any pair. Click on the link beneath this video and it'll take you to an app that can help you calculate your risk for a trade. Thanks for watching.